The Central Bank of Russia has officially announced that the Russian currency, the ruble, will be pegged to gold from March 28, 2022. The fee will be 5,000 rubles per gram of gold bullion. Russia has eliminated about 30% of the value of the US dollar in terms of worldwide gold bullion. Meanwhile, one of the first casualties of the Ukraine-Russia conflict was the ruble. Russia's currency plummeted after the conflict broke out, but has now rallied strongly following numerous moves by Russia to defend it. Most recently, Russia has enacted a temporary fixed ruble gold exchange, which has led many to claim that it is back on a gold standard. Hey viewers, welcome back to Inside World. In this video, we will discuss the effects of this policy on Russia and the world and dive into how this affects Bitcoin, which is often described as digital gold. Between March 28th and June 30th, Russia's central bank will be buying gold from banks at a fixed rate of 5,000 rubles per gram. Does this mean that the ruble now has a fixed exchange for gold? Not exactly. For a gold standard to be in effect, this arrangement would have to work both ways, which it doesn't. The Russian central bank is buying gold at that fixed rate, but it won't be offering to sell it at that price. In a gold standard, the value of the currency is supported because there are arbitrage opportunities when the price deviates from its peg. Let's say the Russian central bank offers to buy and sell rubles for gold at a fixed exchange, and the ruble is trading below this exchange. Demand for rubles would go up, since countries and banks have a chance to buy gold at cheaper prices, but only with rubles. Alternatively, if the ruble became too strong, going above the exchange price, people would sell gold to the central bank at the established price, get rubles, and then use these rubles to buy more gold on the international market. Rinse and repeat until there is no longer a price disparity. That's how arbitrage works. As it stands now, 1 gram of gold is worth $63 in the international market, and 5,000 rubles are worth close to $58. This means Russia is paying below market prices for gold, which wouldn't support the ruble. For there to be an arbitrage opportunity here, the value of gold would have to decrease, so that Russia is paying above market prices for gold. In that scenario, one could sell gold to the Russians for say $65, and then use the rubles to buy $70 worth. This would eventually weaken the ruble in terms of gold, taking it back to parity. What Russia has created, therefore, is not a floor price for the ruble, but rather a ceiling price. Russia is happy to buy all the gold in the world at 5,000 ruble gram, but it won't be selling gold at this price or below to defend the ruble. With that said, the ruble has rallied in the last month, but this can be tied to other significant moves made by the Russians. All of these have to be put together to understand what's going on behind the scenes. Firstly, the Russian central bank has doubled its interest rate from 10% to 20% on the 28th of February. Secondly, and most importantly, the Russian government is forcing foreign governments to use rubles to pay for their products, energy, which is propping up demand for the ruble. Russia has therefore created a link between energy, its currency, and gold. Its exports are now priced in rubles, which in turn are partially linked to gold. Those that wish to trade with Russia can always obtain rubles at a fixed price for gold, but they can't obtain gold at a fixed price for rubles, which is an important distinction. However, they can obtain energy at a fixed price for rubles, which means that there is indirectly a link between Russian energy and gold. If a barrel of oil is worth 5,000 rubles, which in turn is worth 1 gram of gold, then the barrel is worth 1 gram of gold. This won't change, because the Russian central bank has agreed to buy 1 gram of gold for 5,000 rubles at all times, or at least until June 30th. Russia, by itself, can hardly replace the USD-denominated financial system, but with the help of strategic allies, very big steps can be taken to reduce the world's dependency on it, which is very bad news for the US. Russia holds 1,688 trillion cubic feet of natural gas, accounting for 24% of the world's reserves. China will soon become the largest economy in the world. Russia, China, and India collectively possess 16% of the central bank's gold reserves. India and China also have close to 2.8 billion people combined. An allegiance between these three countries could replace the world's dollar-based financial system. Each of them has something to add, and a lot to gain from this, and gold would be the ideal vehicle to make this happen. If something like this were to happen, it could cripple dollar-denominated economies. The West has built a very fragile system based upon increasing amounts of dollar-denominated debt. This has only been possible because this debt is accepted as a reserve. But what happens when it doesn't? Let us know your opinion in the comments below. Russia is opening the doors to a new monetary paradigm, which creates a unique opportunity for countries around the world. The US dollar is being challenged as the standard of value. What will replace it? Gold is the first choice. It has been used as a store of value for millennia, and countries like Russia, China, and India have been accumulating it for years. But in the current conflict, we have seen evidence of a new standard of value emerge, one that has even outshone gold, and that is Bitcoin. Bitcoin was designed, by no accident, to possess very similar characteristics to gold. It is hard to mine, with mining becoming increasingly difficult over time. The supply is finite, and around 80% has already been mined, a similar proportion to gold. And, like gold, it withstands the passage. Russia is the third largest contributor to Bitcoin's hash mining power. Also, 11.9% of Russia's total population already owns cryptocurrency. But the question is that if Russia already has gold as the base of its monetary system, why would it want Bitcoin? Beyond the reasons, Bitcoin would provide a diversification element. It would also give Russia access to the flourishing DeFi market that is developing in crypto, of which Bitcoin is the store of value. And finally, the best defense is a good attack. Bitcoin would be a great way for other nations to compete with the gold-based system. So why not get ahead? What does this mean for Bitcoin investors? The world's reserve currency, the USD, is being put into question, and Bitcoin was created with the purpose of acting as a store of value. This makes cryptocurrency a more attractive investment than ever. Bitcoin can step in to fill this void, as there will be a real necessity for a neutral store of value, free of political agendas and government control. As the world becomes less dependent on the US dollar, other standards of value will rise to take their place. While Russia is not operating a gold standard system, it is tying its exports to gold, which marks a very significant move. People should understand that the current conflict in Ukraine is only the tip of the iceberg. Another war is being fought between world superpowers for control of money, and he who controls the money controls the world. So viewers, we are leaving today. Stay with us until the next video comes out.